Well, good afternoon, everyone. My name is George Evans with the Convergence, and I want to welcome everybody to In Conversation with Convergence. As many of you know, we meet with clients to discuss some of the top issues facing the industry, and I'm really pleased today and joined by a great guest and client, Hank Boughner, who's the CEO of Dynamo Software. Hank, how are you?
Good. It's good to be with you, George, and thanks for setting this up for us.
Yeah, no, we're very appreciative of you joining. Listen, we've watched over the last year or two really kind of your guys' story and your growth and your presence, and it's in the market, and it's been pretty impressive. So I thought we could start today with you just kind of telling our audience a bit about you and yourself, your pedigree. And then we can get right into kind of telling the folks a bit about Dynamo Software itself.
Yeah, sure. Makes sense, George. Well, I've been in fintech and software for most of my career, 20 plus years. I spent a good chunk of it on Wall Street for the first part of my career as an investment banker in high tech and fintech, and then moved over to the investment side. We're investing in venture, growth equity, buyout type opportunities. And then about 10 years ago or so, moved over to the operating side and have been in that role and running various businesses, including here at Dynamo. I'm in my sixth year as CEO. So it's a background mostly in fintech and software, all about growth and building and exploring how to use technology in the financial services world in interesting ways. So it's been a fun career and hopefully many more years ahead of me.
Yeah. I mean, and it's always fun to move to the next adventure, right? And
right, it has grown a lot. Fintech has grown quite a bit since the late 90s and changed in a lot of ways when fintech wasn't nearly as popular as it is today. So it's been a fun 20-year run.
Yeah. And later on, we'll get into some of the next generation stuff. I want to hear what AI means to you later. We'll talk about that. But let's talk about Dynamo first, Hank.
Sure.
I like Convergence at the beginning, not a household name, right? And so love for you to go and give our viewers just an overview and some background on Dynamo, the firm.
Yeah, sure. So Dynamo Software is a 20-year-old company. We were formed in the late 90s, based in Boston in a town called Watertown, in the suburbs of Boston, right next to, sandwiched in between Cambridge and Waltham, for those of you that are familiar with Boston. And we've been there since our founding. And co-founder Krasen Dragunov is still with us. He runs all of our product. And we started off as a software that enabled CRM capabilities for private equity. And Krasen at one point was another private equity firm as head of their IT and was building software and said, hey, I could go build a company. So he and another fellow started Dynamo. And there was a close tie to Bulgaria. Krasen is Bulgarian and came over when basically the wall came down and he'd finished his college studies and was very interested in this ability to be in the U.S. and leverage the R&D and development capabilities back in Bulgaria. So that's what he did. He founded the company. We have been in alternatives the whole time. So we've been in this space for 20 plus years now and building out a complete stack, which I'm sure we'll talk more about in this conversation. But it's on our website and you can see the different front, middle, back office capabilities we have in the cloud that are available for our customers today. Now, we started off as an on-prem software company. Back then, cloud oftentimes was still an unknown word or a word that a lot of large enterprises didn't want to have anything to do with. And so for the first several years, we were on-prem. And then around 2006 to 2007, we moved over to multi-tenant cloud. So we've been doing multi-tenant cloud now for 15 plus years. It's 90+% of our revenue. And we're leaders in the space, we believe, in the alternatives area with cloud software. Now, we still can implement on-prem if we have customers in certain verticals that say, hey, I really want to be inside the four walls. We can do that or deploy it in a variety of ways in shared centers. But again, most everyone's moving to the cloud now. Enterprises are moving that way. We have, AWS, Azure, a whole host of other companies to thank for that. And it's been a really vibrant market now. So that's a bit about the history. We've scaled. We're based in Boston. We have offices in London, in the Middle East now. We just opened up Dubai in the last year. We've been in Singapore and Hong Kong for a number of years now, I believe 8 years. And so we have a good international footprint to go alongside our Boston headquarters and our Bulgarian heritage. And today we're around 350 to 400 employees. So we're a nice, sizable software company. We have well over 1,000 customers around the globe in all walks of life in terms of how they're thinking about alternatives.
Yeah.
And the Dynamo platform works well for that.
Yeah, well, listen, I think the fact that you were in alternatives 15 years ago kind of says something about the vision, and because it is clearly, I at last looked, it was maybe a 32 to 34 trillion dollar market, and and very global, right? To your point, I want to go back to one question on cloud versus on-prem. Just for our readers, I mean, I know clouds, it's everybody at a macro level, it's like in vogue, but maybe you could, right, maybe you could spend a minute just on the differences between cloud and software and on-prem kind of model.
Sure. So on-prem model, just think of, client server. You have a lot of things that are heavy put onto your PC. Think of the 90s when things started to develop quite a bit on the PC front. Yep. On-prem, a lot of software. There were different ways you could manage that, but more software on your own company servers. Think of a closet with a door on it that you maybe the office servers were sitting on. You're running software there and managing office locations. And while convenient and at the time more secure, of course, cloud's come a long way and is secure today, but back then, the IT departments would argue, hey, this is more secure because I can go in and touch the servers, I can feel the servers, I can manage them very locally and see exactly what's going on with them. Now, we all know some of the fallacy of that argument as well, given what hackers are able to do remotely nowadays. But nevertheless, then, many years ago, that was a very, quote, safe way to have on-prem software running locally or put into a shared environment, maybe a colo environment, a co-location where you have racks of servers. But the big differentiation is each of those, quote, instances is for you as a customer kind of locally managed. And the problem becomes when you start to upgrade and do upgrade cycles on that software, just as an example, one example of many, it becomes problematic to do it remotely or to do it on time. So on-prem software oftentimes is off cycle, are not up to date with the latest updates, or someone didn't go, reinforce this part of it or bring in the latest technology and latest capabilities. Whereas cloud, we service in our own facilities as well as with AWS, we have the application running on a multi-tenant basis. So people are sharing the application. The databases are their own, though, so their data is segmented. But the multi-tenant capability of the application layer means that we're able to upgrade the application all at one time. So, for example, this last weekend, we had our summer major release that went out. It's gone well so far. And we update that on a Saturday, and it's available for all of our clients right away.
Right.
And
in an on-prem model, right?
On-prem, you have to call and make sure, well, have you upgraded this? IT teams need to be running patch management, running kind of studies to figure out what's been upgraded, what hasn't been upgraded across many software platforms they may have on-prem. So that's the main difference. It also enables us to configure software a lot faster, do a bunch of other things that you wouldn't be able to do in an on-prem environment. And again, we're good at this. I know a lot of people say cloud, and we do cloud. We've been doing it for 15 years, right? We understand multi-tenant cloud. We understand how to deploy this for our customers, and we're more than happy to talk to you about how that might be of service to you.
Yeah, great. Listen, back to Dynamo proper. I also know a somewhat recent event was some private equity investors, and just love to hear you talk about how that's maybe changed the firm and kind of how you operate. So maybe some background for our listeners on that.
Yeah, sure. So Dynamo, as I mentioned, is a 20-year-old company. We've been around for a while, and the good news is Crass and team for the first 15 years were very thrifty and basically bootstrapped the company. All right, through 2017. And the mindset around that is one of our big benefits at Dynamo. We invest in our technology, but we're thoughtful as to how we travel, how we spend our money. We're not flying around in private jets or in first class, et cetera. It's just the mindset of we're building a software company, right? Yeah. And for 15 years plus, he did that. In 2017, it became apparent, just given the global expansion of alternatives, the fact that Craftsman was carrying a lot of the load and one of some of the other partners, maybe not as much, and we're looking for a transaction. So Francisco Partners, the big private equity firm in San Francisco, came in. It's a firm that I've known for about 20 years, given my days back on Wall Street, and really had a good opportunity to leverage one of the great, kind of software of Dynamo, coupled with how Francisco Partners knows how to build companies in software. And that's worked out really well. I came in as part of that investment in that transaction in 2017, and we successfully grew the company. We've been growing anywhere between 20 and 30% per year. Sometimes it's higher in certain KPIs, sometimes maybe a little bit lower, but it's a high growth engine across multiple KPIs that you'd want to look at. And because of that success, a little over a year ago, Blackstone came in as well, the Blackstone growth team, who also has a very large footprint around the globe. They're probably the largest alternatives manager in the world. I think it's around $1 trillion in assets now. So Blackstone understands this market really well, and they help us expand across a range of different areas, just given their global footprint and things that we're trying to build, whether it's the Middle East, whether it's in Europe or in APAC.
Yeah, well, two first-class PE firms, really, right? They don't get much better.
Yeah, we're very happy. They're great partners. They think strategically and thoughtfully, and they're growth-minded, which has been really helpful for us.
Yeah, yeah. It's interesting because, as you know, Convergence being a client, we're a DaaS company. So we're often now debating, the merits of being DaaS and SaaS, and that's for probably another episode, right? But
yeah, exactly.
Yeah. Let's talk about 23, Hank. I know we're midway through here. Everybody's, talking to me about vacations and 24 planning already, right? But I'd like to hear a little bit about kind of your 23 agenda, right? What did you come into this market, trying to accomplish in 2023?
Yeah, so 23 has been an interesting year for us. We usually start planning in August of each year and do a forward lookout for the forward year. Just say, what do we think it's going to be for Q4? Where do we think the forward year is going to land? So as you might imagine, as July is upon us now, we're already starting to think about that for next month.
Yeah.
And back in 2022, when we started having these discussions, we knew the economy was getting softer. We knew that things were challenged in a lot of areas. That said, the alternatives market, there's a lot of kind of support and interest in the space because it's providing such great returns for investors. And the LP community, if you think about our general partners who are investing capital into companies, as an example, and limited partners who are the big foundations and endowments and pension plans that are investing in the GPs, many of those LPs are under allocated to alternatives. Maybe it's 5 to 8% is the target. They're at 3%. Or maybe they want to be 10 to 12%, but that they're at 6%. Most LPs are generally trying to find more exposure to alternatives, private equity, venture capital, hedge funds, real estate, things like that. Again, this is on our website. You can see the verticals that we classify. It's a big growth opportunity. So it was important, despite what was going on in the economy, that we continue to grow and drive our kind of capabilities as we go. And we certainly did that. In this year, we opened up, as I mentioned earlier, in the Middle East with a physical office presence in Dubai. And that was after a lot of work and support from our London team. We've had a number of customers in the Middle East, and now we're able to support them locally. That's just one example. We've continued to add to our team in London, add to our team in Singapore, and of course in the US. And it's on the backs of kind of a market where they need more technology to support what's going on. Now, why? A lot of this is private equity firms, for example, or hedge funds, real estate investment vehicles. Maybe 10 years ago, they had a handful of partners that were all in New York, and they could talk to each other on Mondays, and they could see what's going around on the water cooler or the Monday morning meeting, and it was all kind of there to be discussed. Then what happens is they become not just small niche private equity firms, they become asset management firms. They have a lot more people. They have billions under management now, not just a $500 million fund or $1 billion fund. It's growing, and you've seen this happen everywhere. And it becomes very critical, despite what may be going on in the economy and what's happening elsewhere, to have technology that supports their business models. Because if one fund's not doing particularly well in a strategy, they're able to raise different strategy
Yeah.
funds, right? That maybe meet. Maybe it's a credit fund, maybe it's a distressed fund. And they're doing all this across different strategies. So while one may be a little out of favor, other ones come into favor. And a lot of big firms are doing this. So at the center has to be not only a good working team, but also technology that enables the communication. And so we spent a lot of time thinking about for 2023, just our primary objective of being the single source of truth in organizations. They can have all their information there, all their relationships, all their deals, everything that's occurring that's needed for the deal machinery, through the fund accounting, over to interacting with the LPs through portals. All of that is available in the Dynamo platform. So despite what's going on in the market, yeah, we're doing well. We do, of course, watch the interest rates. We didn't expect them to go up 500 plus bips. They did. It doesn't really impact us all that much, but nevertheless, it is dampening the broader economy. So we're going to watch that. But we're excited about what we've been able to accomplish in 2023. We are continuing to grow despite what's going on in the market, and we're looking forward to a successful second half of the year. We're wrapping up Q2 now, and we'll be off and running to the second half of the year here shortly.
Are you doing anything in 23, Hank, on the product front that you can talk about today? That's kind
sure.
of new.
Yeah, as I mentioned, we just had our summer release out that came out this weekend. So on the product side, we continue to develop across the stack. Now, what's important to understand with Dynamo is if you see this platform stack that we have again on the website, it's our code and our software. So we control what we do. It's mostly a Microsoft stack, but nevertheless, it's all our code. And so we control the release cycles, what products we want to build. And so we're constantly listening to our customers, our 1,000 plus customers across the globe in different regions, about what they think may work best, whether it's on the GP side or the general partners investing, or on the limited partner side, the endowments, the foundations, the pension funds, thinking about what would work well for them. So some of the key areas there are mobility. Everyone wants to have mobility. And we've continued to enhance our capabilities on iPhones and iPads and Android devices, as an example. On the back office side, we continue to improve and drive our ability to track the fund accounting requirements, Fund 1, Fund 2, Fund 3, Fund 4 that someone may have, all the statements that need to come out, the quarterly letters, the capital calls, et cetera. All that product investment is occurring right now. And then on the LP side, a big push in the PMS side, the portfolio monitoring management side that we work on in the back office, enhancing the CIO dashboards for people to be able to see where they're investing across a range of assets. It's a multi-asset class. That means we can see the private investments that an LP makes or a CIO would see, as well as their public positions. You bring in the public positions, you're able to see the complete portfolio. So if you have 20 billion invested, say 2 billions in alternatives and 18 billions in public debt, public equities, and what have you, all of that is able to be seen in our dashboards that you log on to and in the cloud, and are able to see your data instantaneously.
Yeah, I mean, and that's a big differentiator, is being able to go across, public and private, right? It sounds simple, but it's not, right? And
It's not. It's not.
How about as we stay in 23 before we move on, how about the headwinds, right? We think here at Convergence about, the market slowing down, the new capital coming into the market, this recession that's we keep hearing about looming, but it keeps getting pushed out, right? What do you worry about in terms of just the headwinds in the market right now for Dynamo?
Yeah, as I mentioned, the overall market for alternatives looks good, but certainly there are headwinds right now, and you can't gloss over what the broader economy is doing. At least, kind of geography by geography, different things in Europe or the Middle East may be impacting those local markets versus what's in the U.S. So we watch that carefully. In terms of our customers or potential customers in pipeline, yeah, we've seen customers in our pipeline say, we're just going to wait on this decision right now until the economy has a little more clarity. I'm sure lots of folks are seeing that right now. And so we're monitoring that. Again, we are a CRM company at our core, right, in terms of how we started. And so we have great, kind of pipeline reports information on which customers by region, when they came into us, how long they've been in our pipeline, et cetera. So we're able to monitor and see where some of those delays might be happening. But to give you an example, usually in our four main verticals of private equity, venture, hedge fund, and real estate, if you look at the 20-year history, there's a pattern to these verticals as we go into a recession. The hedge funds typically get hit first.
Yep.
Right. So that's something we watch. We don't get spooked by it. We say, okay, we've seen this before.
Yep.
What's going to happen is the hedge funds get hit, and guess who 18 months later comes first out of the gate at the other end of the recession? The hedge funds. They're out raising capital again because the stock market's, getting hit, or maybe
that's history repeating itself again right now, right? Yeah.
Exactly. That's exactly what's happening. So you see this in the verticals of, okay, hedge funds get hit sooner, maybe real estate slower to react. And we're seeing that as well, like as these contracts inside of cities, with some of the cities that have been impacted because of COVID and people working from home, what's going to happen to commercial real estate market? And I'm waiting to see. I've lived in multiple cities throughout my career, and I love downtown areas, and a lot of them are under intense pressure right now. And so we'll see what happens. But the point is, that's a lag effect. And usually real estate tends to be a little bit slower in terms of the impacts, and then they tend to be a little bit slower coming out on the other side. It's not true for every instance. I'm sure there's examples of hedge funds that are operating in real estate, but you can see these kind of patterns. Now, who's kind of stable through most of this are the limited partners, because why? They're taking a very long-term view. Maybe they cut back a little here, a little there, but they're still deploying capital. They still need technology to help them deploy and manage that capital, because again, they're taking a much longer arc of a view on the investment horizon than, say, an individual manager might, whether they're hedge fund or real estate or private equity.
Yeah.
So, but we're watching the economy carefully.
I mean, we saw exactly what you saw, right? In our numbers, we saw, say, over the last 18 months, just the great growth in closed end, right? And even though hedge fund assets were growing, it was kind of all going into existing funds, right? So the launches,
that's right,
that we see the amount of launches, and now it's starting to roar back to your, to your point. Tell me, let's talk about fund administrators. I want to talk a little bit about that as part of this. Big part of my background, also big part of our client base, right? And I know a big market for you. Talk, there's about 625 of them at last count, right? Worldwide, it's probably the 80-20 rule still in terms of AUA, right? But as you keep thinking this market's consolidating, somebody new hangs a shingle, right? And it's been over 600 for years, right? But I wanted to talk a little bit about kind of your view on that market, or how you approach these guys. Do you see them building what you build, right? Just curious what your take is on fund administrators.
Yeah, sure. So if you think of the Dynamo stack, and the segments we play on the left side of our chart, down at the bottom, again, you can see this on the website in the Why Dynamo section, you'll see the fund accounting software piece. And so we have fund accounting software that enables, whether they're individual private equity firms or fund administrators themselves, to use our software to help manage the production that's required to get the financial statements out, the capital calls, the K1 kind of notifications, that kind of thing out to folks.
Yep.
And so that software that we've built is quite effective. We get high marks on it. And again, fund administrators like to use that as well. So we target and work with fund administrators on a number of fronts to help them use Dynamo software. And then they in turn, or whether it's just that piece or the portal piece as well, we have a portal that the fund administrators can use so that when they're working, say, with a fund, the LPs in that fund can log into the portal to get information that's required. And the fund administrator does all the great work on the accounting side, the knowledge side, the perspective side, using our software to prepare that. And so we're more than happy to target and work with these fund administrator teams in the U.S. and increasingly interest in going global with various components that we can have depending on the local accounting rules. Now, in terms of kind of the fund administrator, the second part of your question, do they think that they can have their own software and do what we do? Some do. Yeah. And I'll leave that up to the folks in the audience to decide whose software they like better. Of course, I'm a big proponent of Dynamo software. My general perspective is this is all we do. We've been building it for 20 years. It's very difficult to build software. Over my career in software, there's lots of folks who say, hey, we can go build that. That doesn't look that hard.
Right.
And you get into these 1 or 2 years in, you're several $1 million in, and you realize, wow, this is pretty hard to do. And one of the main benefits we have is not only are we, kind of on a growth trajectory and profitable, but we've invested for 20 years into this. And importantly, we get client feedback from 1,000+ clients across the globe all the time on how to make our software better than alternatives. And it works on both sides of the coin, both the GPs and the LPs. Feedback from one may help the other area. And that cycle is incredibly important, and I think positions us really well to work alongside fund admins to offer our software. And I think I have many of them come to the conclusion, hey, well, let's just not try to build this. Let's focus on what we do really well, and then let's use Dynamo for the software piece.
Yeah.
And we're happy to talk to you about what we do.
Yeah. And what's interesting is you see that, last year there were probably 20 to 25 M&A transactions in that space. So they're also all faced with integration and multiple platforms. And to me, it's an opportunity for people to kind of take a step back and kind of look at a brand new kind of platform and blueprint, right, for the business, right?
Yeah, that's exactly right. And we're open to, and we can work alongside other technologies as well. We're an open platform. We have an open API, lots of different ways to get information in and out. Happy if you say, well, Hank, we've got a team we've worked with for years. That's okay. We can come in as the number 2 provider, right? And in certain areas as a backup or in certain things that we do really well. We're pretty flexible at Dynamo and have, again, given all our instances of what we do around the globe, we have pretty good, we're pretty quick reads to figure out how we might be helpful.
Yeah. One or two other questions. You talked about getting to 350, 400 people globally. How about we often all hear, at this level about, and see it and live it, the war on talent, right? Capacity and hiring. And so how are you finding, developers and the kind of people you need kind of in this environment, in this kind of remote and hybrid environment, with kind of at grown to 20-30%, has that been challenging for you to staff the way you need to staff?
Yeah, I mean, clearly staffing, and we're a software company, so most of our expenses are around payroll and people, and it matters to get the right kind of people in so that we can drive our success for ourselves, as importantly for our clients. We've had the benefit of being in Bulgaria since day one, and there's a great number of technical schools there that, if you think back prior to the Iron Curtain coming down, this was a center of excellence for their PCs, calculators, chips, etc.
Yeah.
And that's why the technical schools are in Sofia. Now, we're not the only ones that figured that out. It had over the last 5 years, let's say, gotten very intense with some of the Western companies based in London or the U.S. saying, hey, there's more nearshoring in Bulgaria and Romania that is pretty interesting. So we have had that war on talent experience in many ways. We try to make it, though, a very positive place to come. Our culture is great in Bulgaria. We got a lot of team members there. Those in Boston. Boston also has a strong culture, and people want to work and live in and around Boston.
Yeah.
And so that's been helpful for us to attract technical people there. So those are kind of the 2 areas we spend a lot of time, or most of our time, hiring folks. Now, I'd say in the last 6 to 12 months, it's softened a little bit. We've certainly seen, even this morning, there was more announcements of reductions in force, unfortunately. But it's clearly over the last 3 to 6 months been hitting different pockets in technology. And so I think that's made it a little bit easier for us to find people on a relative basis. It's still challenging because you want to find the high quality people that are really going to move the ball forward for you. So we take it as a very high priority for us. There's no simple answers. We have internal recruiting. We have external recruiting. We have all hands on deck. I'm on LinkedIn looking for people sometimes of different backgrounds. We all throw our hand in to try to help build Dynamo.
But it's a good problem to have, right? Because you're growing.
It is,
right?
It is,
and
it's a lot of fun to be hiring.
Yeah, right. So all right. Let me. The last area I wanted to cover, Hank, and you've been great with your time, is the infamous AI, right? So I want to talk about AI, and means a lot of things to a lot of people, but I'd like you to come at it from two perspectives, right? One,
Yeah.
kind of how does it impact your business today, right? And how do you think about AI, and how is AI part of your business today? And then really your view on the future of AI at Dynamo, right? At least that what you could see at this point in time, right? Um,
Well, it certainly is a buzzword, right,
right.
George? I mean, everyone's talking about it right now, and it's exciting, in so many ways as to what you can do with AI and Chat GPT and other platforms that will develop. From Dynamo perspective, we've had elements of machine learning in our platform for a long time, whether it was, inbound emails, scanning, auto-populating in Dynamo. So, for example, if you're in Outlook and you want to sync an email out, it's already reading through the contacts, the people that are there, some of the contents or project names in that email, so that it can pre-populate what you put into Dynamo. Then you hit send to Dynamo and approve it. So
Yeah.
we've already been doing things like that. Auto scanning of meeting notes, getting them into the system, RPA technology to go out to portals and pull in PDFs, which is an important component on the LP side of just all the GPs communications that are coming over are, kind of in PDF format. How do you go out and collect all of those without having to have a human being do the whole thing? So that's been working its way into what we do at Dynamo. In terms of, looking forward, things that folks are looking to have, kind of additional impact on is searching across all of the Dynamo platform with your data in it for meeting notes, like summaries of meeting notes that would be able to cobble together. Let's say, for example, you've been meeting with a client for 10 years. You've got 30 notes in there, 3 a year. And then can AI go through and just summarize right before your meeting, like in
Right.
5 paragraphs, what it means. And for those of you that have been on ChatGPT, for example, you'll see oftentimes it'll follow the classic 5 format: intro, 3 bullet points, maybe 4 bullet points, conclusion, right?
Yeah. Right.
Logical way to
Right.
present it. So that is something that we're looking through now. We can do it in certain parts of our platform. We're working through other areas like PDFs as to how you digest all that, and that will come. I'm not worried about the timing of that. Natural language search, you just type up in the top search areas. We have lots of search we can do right now, but it has a full reach and interprets the results so you get the best results back. Low code workflows in terms of how you create workflows, like if this email comes in, these 4 actions occur. Maybe workflows that are proposed, what are the more efficient ways to do things, policies they could put together. All of these, many of you have probably gone on and put in job descriptions, say, I'm going to look for hire this kind of person. AI can come back with a page of, okay, here's your job specs. It's very easy, right, very fast.
Yeah.
And then you got to just edit it a little bit more maybe and tune it to fine tune it to exactly what you want, but it saves you a lot of time. And so these are just some of the AI components that we think about frequently, and that will continue to expand. Again, we're a bunch of techies, so it's not like we don't enjoy this development or think about it. At the same time, we try to be thoughtful and strategic on AI. We meet monthly as a senior team. There's a subgroup of us. It's our AI task force. So it's important to keep abreast of changes that may impact our business in a negative way as well. Importantly, educating our employees on the use of AI, which I would encourage everyone to do. We're certainly new at this as well, but it's just good to get the message out. We're a lot of developers on our team, and we don't want them to be taking client data and throwing out to AI, and we can't ever get it back, that kind of thing. So we spend time educating and training and try to be sensitive to security, privacy, copyright issues, whatever the case may be. Well, so it's very much in flux.
You got a great client base, right? That I think can help drive a lot of that AI agenda. A lot of those ideas are going to come from clients too, right? And I also think it's it's also something we all have to look at as a potential disruptor to our businesses, right? And you've really got to make sure you're thinking about offense and defense sometimes with AI. I think
that's right.
Right. So
offense and defense is key.
Yeah. So listen, I want to thank you very much. It was a great conversation with you. You guys have been a great client of Convergence, and really appreciate it.
Well, thank you.
I felt good earlier when you were talking about CRMs. You're taking our data actually into your CRM, which is good. Right?
We are.
And
you've been a great partner. George and the team have done a great job for us, for all of you listening. It's been very informative, very knowledgeable, and very good, solid discussions where he understands the industry pretty well. So it's been a good partnership.
Well, thank you. Thanks, Hank. And listen, we love to join market leaders. So you're very enthusiastic about what you guys are doing. It's pretty impressive to watch.
Sure.
So listen, thank you. Enjoy your summer and we'll take it from there. And I want to thank all of our listeners today and for taking the time to listen to Hank and myself. I thought it was a terrific conversation. So thanks. Terrific conversation with Hank Boughner at Dynamo Software. I enjoyed speaking with Hank. He's really a real professional in this industry, and we're very pleased to partner with him. As always, what I do now is just kind of finish up the podcast with just a very quick discussion around service provider market share and league tables. So, what I spend time on is just the distribution of growth, right? And what we're seeing in the market. So I'll start with fund administrators, right? So over the last year, so this would be, June to June is what we're really talking about is the assets only grew about 1.5%. And administrators 1 to 5 grew just about at that, right? So stayed pace with the market. But where we saw the growth at 6 to 10 was very close to 5%, and at 11 to 25 was close to 6%. So we saw really the growth, the administrators 6 to 25 really outperformed the market, right? When you looked at auditors and at that same 1.5% asset growth, the big four grew at about 1%, so really lagged the market. We saw auditors 5 to 10 grow at about 2.5%, so a little better than the market. But the real growth in the market at almost 6.5% versus 1.5% over that year were auditors 11 to 25, right? So that's again a very solid distribution, a little bit down market. When you looked at custodians, right, and assets as custodians grew about 3.3%. This is interesting to me, and there's 1,400 custodians. Custodians 1 to 10 grew at about 6%. 11 to 25 grew close to 7%. So both of them about double the market. But all other custodians, right, beyond that, assets decreased almost 8 or 9%, right? So clearly on the custodian level, all that growth has stayed at the top, right, of that market. And then lastly, prime brokers, which I like to mention, and we look at more of fund growth at prime brokers. So funds grew over the last year almost 9%. And I think what's interesting is prime brokers 1 to 10 only grew at about 3.5%, and prime brokers 11 to 25 did not grow, actually shrank over 8%. So most of that growth in the prime brokerage market was pretty much down market again. So a very consistent theme across service providers. So I want to thank you all. This was our, I think our 28th, as I mentioned, episode of In Conversation with Convergence. I'm George Evans, and we will see you all next month. Have a good day, and happy 4th of July.